DOGE, the Department of General Efficiency. Can I get sort of your general feel? My stance was if there actually ends up being a Department of General Efficiency, it would be more important who ran it as to what they did.
My view on what was likely to happen with the Trump administration would be because their primary goal is to make the Tax Cuts and Jobs Cut permanent.
There was a lot of euphoria going into a Trump presidency. I think the realization is that he has to walk a thin line between not disrupting markets. They want to fire however many million government workers. Don't do that in one day.
My perspective on that is governments trying to clamp down on things like that. China's the best example, right? I mean,
Didn't work, right?
They tried zero COVID and it blew up in their face. They have a closed capital account. This is one of my concerns about the dollar right now is that, first of all, that U.S. dollars become a petrocurrency. That was not true for 50 years, but we're now one of the biggest exporters in the world.
I am Jim Uriel. That's Bob Iacino. Today we have another great guest, and I say this all the time. You might think that Bobby and I are full shit, but you cannot deny the fact that we get great guests. We have Barry Knapp of Ironsides Macros. I'm sure you guys are familiar with him. Barry, can you quickly tell them where to find you before we move on so I don't forget?
Sure. I'm publishing on Substack these days, ironsidesmacro.substack.com.
Nice. And wanted to remind you guys to please patronize our sponsors, Hardcore Italians. It is coming up to Christmas. There's not many shopping days left. These gifts are perfect for you or for the Italian in your life. Thank you guys very much. None of this works without your support. You've given us so much with the DMs, with the retweets, all the feedback you've given us. Thank you. Bobby, what do you got?
15% off if you use the code FU.
Yeah, you heard him right. 15% off if you use our personal code, which is FU, because this is the show that critics called smart and irreverent. But that's us. Barry, how are you, my friend?
All good.
Good. Where are you living these days?
When the pandemic hit and Governor Phil Murphy decided you could catch COVID playing golf in a foursome, but not in a twosome, we sold the house in Jersey and moved to our second home in Vail, Colorado. So,
good for you.
Wow, fantastic.
So
I have
two
a home
kids in New York. We're back and forth, but home base is Vail now.
I have a home in Tabernash, which is right next to Winter Park. It's Winter Park, Fraser, Tabernash.
Yeah.
I have 2.5 acres there. Built a home out there about 15 years ago. I love Colorado.
Oh, fantastic! Yeah.
What's your favorite thing to do there? Ski or hike or?
It's golf all summer and ski all winter. Friday afternoon, either making a few turns and then going to the Red Lion, or playing 18 holes of golf and hanging out at Sun and Up Golf Club. But
God, it sounds fantastic. Have you
finally
dialed
gave up
back the amount of work you do, or do you still work like a fiend like when we knew
No,
each other?
I'm working pretty much the same. The big difference, though, is there's no more 2 hours back and forth into New York City anymore. So
That's awesome.
I get up, I'm on New York hours. Market closes at 2. I can be down and tee off or.
That's awesome.
The best days to go skiing are Fed days because nothing goes on in the morning.
Barry, I want to start off with asking you a question that I've been sort of wrestling with here through some of the people that I communicate with daily about markets. And that's about DOGE, the Department of General Efficiency. Can I get sort of your general feel? My stance was if there actually ends up being a Department of General Efficiency, it would be more important who ran it as to what they did, right? And obviously, the sort of nominees for this fictional, non-existent department, which may never end up being an department, right? Or a department, it may just be something that gives recommendations to the executive branch within the power of the executive branch, it being Vivek Ramaswamy, who we've had on the show, and Elon Musk, who we're lobbying to get on the show, but haven't been successful yet. Luke Groman put out a piece yesterday talking about the utter crash that would happen if they have any sort of success at all without first devaluing the dollar somewhere within the administration. In other words, you cut a bunch of spending, you also cut a bunch of revenue, unprofitable or not. Do you have any sort of feeling on that sort of overall conversation that's going on about how much they could cut, how quickly they could do it, and any sort of effects it might have?
Before they even announced this Doge initiative, my perspective on this for many years has been government receipts are endogenous to growth. We've averaged 17.5% receipts as a percent of GDP since World War II. We raised the top marginal rate to 90. We get 17.5. We cut it to 28 like we did under Reagan. We get 17.5. Spending is, of course, exogenous. It's set by Congress. There was what I thought, for the most part, was an implicit agreement with both parties to never exceed much over 20% unless we went in recession. And then you would immediately bring it back to 20%. Well, we were at 20% in the first 3 years of the Trump presidency. Even when he cut the deal with Pelosi and Schumer to break the Budget Control Act 2% spending caps from the BCA of 2011, we still were only at 20.6%. Of course, then we went to 30 and 20, stayed at 30 and 22, and now we're at 24 during the next 3 years of the Biden administration, and the CBO projects we're at 24 from now through the 10-year time.
Give us what that ratio is, because I was thinking in my head debt to GDP.
But no, I'm sorry. That's government spending to GDP.
Government spending to GDP. Got it. Okay.
If I wasn't clear, I apologize. But yes, government spending is now at 24% of GDP, and there is no way to close that gap, absent a complete restructuring of our tax code. As long as we've had the income tax code, we get 17.5%. If we run spending at 20, we have a sustainable deficit. We can sort of inflate our way through it and not really drive up the debt. Although ultimately, to get the debt on a lower trajectory, we're going to have to run a primary surplus, which would be spending less interest payments minus receipts. So here's sort of where I was at with the whole outlook before the election, which was, if Harris were to have been elected, her initiatives undoubtedly would have been expanded child care, elder care, some more spending programs. Congress might have been willing to address those the same way we addressed the 2003 or 17 tax cuts, with a born-on date or an expiration date on them, knowing full well that once you have another entitlement, you'll never get rid of it. However, my view on what was likely to happen with the Trump administration would be, because their primary goal is to make the tax cuts and jobs cut permanent, the only way to do that would either be to come up with more revenues, and I don't think tariffs will be scored by the Joint Committee on Taxation as sufficient to offset the tax cuts, which means they're going to have to cut spending. Now, when you have that conversation, I had it with Kelly Evans, for example, and the immediate one is, well, discretionary spending is only 30%, and defense is half of that, and entitlements are 70, and so we can never get there. My comment was, well, we were only there, a few years ago, and of course we can get there. And who's to say entitlement changes have to be about eligibility? How about just changing the healthcare programs more towards health and wellness? Some of the stuff we were talking about earlier, creating the right incentives so spending doesn't grow at 10% per year as it has in recent years. So I absolutely think we have to get spending down. I guess I don't know what Luke was thinking about with respect to this, but listen, every time I get asked about GDP, for me, the mix matters. Last quarter's mix was an 80 basis point contribution from government spending. That is not going to drive productivity and the overall per capita GDP up, the health of this country. It's not going to make this country any better, any richer. What will is driving productivity and having capital spending drive growth. So last quarter was consumption and government spending. We need, a rebound in capital spending. We need to rebuild our capital stock. Software investments even slowed. So I'm not really worried about if that 80 basis points of GDP turned into, a 50 basis point subtraction. It's not going to matter for S&P 500 earnings for the most part, except for the rent seekers like, drug companies and defense companies maybe, but I doubt we're cutting defense. So really the key is to get that government spending back down to 20%. This is old Milton Friedman stuff. Don't tell me about the deficit. Tell me about how large government spending is as a percent of GDP. And that, for me, is the big issue. So I'm going to disagree with Luke, I guess. I haven't heard his whole argument, and say that I think we can get spending back to at least 20% of GDP without, destroying the markets. And quite frankly, that's what will stabilize the back end of the bond market, right?
So here's my
we're
question
on a track.
Then. You
Please.
just mentioned the back end of the bond market, which I think is fascinating, because I want to know if you can agree with me on this in any way, because I can foresee a scenario in that we are cutting spending, not like they're saying like we're cutting it all the first day, which I think would be disruptive to markets and not a great idea. But if we are actually looking at things to cut and cutting them and moving down the right path, and taxes are lowered, perhaps corporate tax lowered, and revenues coming in the short term are lower, and we are running bigger deficits and bigger debt, but we are headed down this path to mini austerity. I picture a scenario where people would be more interested in buying our bonds globally, even though we have higher deficits. Is that possible?
100% it is. And that's what happened in the early years of Reagan, right? I mean, the deficit went up because we spent money on defense, but people viewed it as a reasonable investment. Deficits widened, but growth was strong, inflation was coming down. And that is absolutely a scenario that I would envision. I hear all the time people say, oh, no one's ever cared about the deficit, right? There was a Neuberger Berman PM who was part of the Big Short who would say, oi, the deficit, right? No, that's not true. From January 4th, 2021, the day the Republicans lost the Senate in the Georgia special elections, through the signing of the American Rescue Plan, 30-year reals, the part of the curve least impacted by the Fed's balance sheet policy, and remember they were still buying $1.5 trillion that year, or the rate policy, that moved up 60 basis points on a line. Of course, then we know Yellen stopped issuing. She drew down the Treasury general account, and the Fed was still buying, and so the market stabilized. Well, we had another episode last year through September when 10s went through 5 and 10-year reals went to 2.25 or something, and that all started with Yellen announcing she had an extra $500 billion of coupons for sale in the back half of the year, and again, big move in 30-year real rates. We've had a couple of signs that we're reaching our fiscal limit, and anyone who thinks otherwise is not really paying attention. And quite frankly, one of the papers at Jackson Hole this year was all about how that the supply is really starting to impact the price. So
over the last
100% getting it on track will stabilize the market.
Sure. So over the last year, is it fair to say half of our auctions outside of 7 years have been met with some disappointing demand? Is that about accurate?
It sounds about right. The ones that I found most interesting, Jim, was I call it every month. I'd say, uh-oh, it's belly week, right? And it was 2s, 5s, and 7s. And every time we did those auctions, the market would get a bellyache, and the part of the market that would sell off was not the belly of the curve, although there was always a concession to take those deals down because they're so big. It was the back end that would sell off. Yeah. So you'd watch like, okay, the 5-year, tailed a basis point and a half or something, and 30s just went up 6 bips. And you're like, why'd that happen? Because the market was struggling with that supply.
Okay, so quick question about equity markets. Because today was an okay day. I think that there's a little bit of a hangover. There was a lot of euphoria going into a Trump presidency. I think the realization is that he has to walk a thin line between not disrupting markets. They want to fire however many million government workers. Don't do that in one day. We are all market guys. We understand the problem with just because it's a good policy, it's the pace at which they implement that policy, which is very, very important. How do you think equity markets view this right now toward the end of the year?
The seasonality is really favorable, but I'll tell you what I think the big benchmark date is, which is December 20th, when the continuing resolution for that budget deal, to fund the government expires. And why I think this is so important is if you go back to 2017, the first Trump administration got hung up with repeal and replace. And so they didn't get the tax policy for almost a full year. So if they decide to do another short-term CR for a couple of months and they take on tax policy at the same time that they're taking on trade policy, then the market can deal with that, right? But if they do something like another omnibus spending bill, push it all the way out and say, we're not going to worry about taxes till the second half of the year, they don't make those rates retroactive back to the beginning of the year, that to me would be a more difficult environment for equities, right? Like we know trade policy is disruptive. It caused a hit to business confidence last go around. It caused the dollar to move up. I'm getting somewhat concerned about, a sharp move in the dollar, like what happened in September of 22 when Japanese had to intervene. The pound flash crashed. That was my note this week was our dollar, everybody's problem, right? So,
Right.
but if they do tax policy at the same time that they do trade policy, and then they're cutting government, and as you say, they put it on a longer time horizon, the equity market can deal with this. But that sequencing, I think, is key.
In a way, Barry, that's a little bit of that is my fear. So, for example, according to, actually, I don't know who it's according to, but
it's according to me then, if it's smart, if it sounds smart. It's
well,
according
I
to
don't
me.
know if it is smart. According to Jim Iorio, Trump announced Elon Musk and Vivek Ramaswamy will lead the Department of Government Efficiency with a mandate to finish their work by July 4th, 2026.
Well, it's not from
in
me.
time for the U.S. 250th birthday. And then Musk replied with a tweet, it will be done much faster. Now, I guess this is the part that worries me. Now, I'm bullish. I was on Fox Business. Well, I was on there today, but a couple of weeks back, I was on there. And Neil Cavuto asked me what I thought of the markets. And I said, I think we've entered about an 8-year bull market and we're at the beginning of it. I can change that. That's pretty broad. But my reasoning behind it, this was pre-election. So now I see this and I say, okay, if this happened rapidly, I could see a 15 to 30% decline in equities initially. I mean, that is some tough austerity, 20, 30% of government payrolls. But I think that would be a multi-generational buy if that actually happened due to this sort of, let's call it mini austerity. So if we're seeing that, if I'm predicting that, if anyone else is thinking the way I am, where do you find the strength, or where does the market find the strength? Austin Goolsbee said he expects 125 to 175 basis points of tightening by the end of 2025. The market currently is pricing in 75. Right? What?
You mean easy?
Sorry, easy. You're right. Right now, the market's pricing in 75 basis points through 2025. And we are talking about a 10-year that hit like May 23rd highs at 446 today before it came back a little bit. How does all that play in? Like, what is the long end responding to today, now, a week from now, when people are listening to this?
First of all, this has been just disastrous Fed policy. The combination of the Fed, Treasury, and the fiscal stimulus in 2021 was just an epic overreaction, right? The pandemic policy panic. 1.7 trillion in liquidity injections from Yellen, 1.5 trillion of liquidity injections from the Fed, driving the spread of mortgages to Treasuries to all-time lows, driving up the Case-Shiller home price index 50%. Disastrous. But then they compounded the error by, rather than doing symmetrical policy, unwinding policy similarly to how they had initiated policy, which would have been much more aggressive balance sheet management, right? Even if they didn't want to sell mortgages outright, which they could have done easily in early 2022, they could have been, as any treasuries matured, reinvesting in bills rather than longer term coupons. They would have never had the longest yield curve inversion of the 3-month 10-year, which is roughly the proxy for small banks, that we've ever had, right? The second deepest ever, next to Volcker, and the longest we've ever had. And it just impaired.
Jimmy's been saying that.
Right. It just impaired the small bank sector. The ROE and the regional bank index is 5 right now. Like, they don't have a solvency problem, but they have a huge profitability problem. That is squeezing small businesses. We don't measure small business employment well. We do know we're getting an 818,000 negative revision in the year ended last March, right? And that overestimation of small business employment has likely persisted. So the Fed needs to get to 4, and they need to get to 4 in very short order, which to me is the level that will allow the small banks to start reopening credit, earn their way out of this weak profitability, start providing credit to small businesses. And I don't know what they're thinking with potentially skipping in December. That would just be such a mistake. I'm not sure Goolsbee's right that they need to go to 3, but they need to get to 4 quickly. And
let's consider this for one brief moment. Maybe they don't give a shit about the smaller, medium-term banks. I mean, Janet Yellen in Congress looked us all in the eyes and said, if you are systemically important, you will be saved. If not, you are out of luck. Do you think, okay, again, everyone says don't ever look for sinister when just run-of-the-mill incompetence is an explanation as well. But some of the things they do all seem to point in one direction. Is there a goal to eventually just have 15 banks and have it be somewhat of a nationalized system because they're too big to operate without the government?
Well, if that was Yellen's goal, she should have told the rest of regulators like, Tim Wu over at OCC and Grunenberg at FDIC, because they didn't allow any bank mergers, right? So, yeah, the banking system needs to consolidate, no question about it. But I've got to believe that Yellen just was this Keynesian, hey, we've got a problem. I mean, I had a former FOMC participant ask me the question about the liquidity drain that she did in 2021. And he said to me, do you think she knew what she was doing? And I said, 100% she did. She sat down, started in February, said, we're going to drain all this liquidity. And it was in the same direction as the Biden administration and their 1.9 trillion of stimulus. It was just thinking, okay, it's like negative rates, right? If low rates are good, negative rates must be better. They're not, but it's just this trap mentality.
Let's look at sectors that you think will benefit from the new Trump presidency, and then Bobby, you take the next question after that. What do you think? What are the granular level of fallout from these?
The guy that got appointed energy secretary or nominated for energy secretary is awesome. This dude, Chris Wright, is tremendous. I've got his book, Bettering Human Lives. So I met a guy a year ago. My buddy went to KU, and my dad was a professor at UConn. So KU was playing UConn at Kansas. I texted him. I figured we were going to go to a bar and watch a game. Instead, we went on this guy who's an energy CEO, second biggest fracker in the Balkans. We went on his Learjet to go to the game, which was pretty freaking cool, actually. But he has been telling me all about Chris Wright. He sent me Chris Wright's Bettering Human Lives, 180-page glossy. It's tremendous. My view was, first of all, what shale did was fundamentally change the elasticity of supply of energy. When we look, you guys learned basic economics, and elasticity. It was oil's, supply is really inelastic. You got to drill in the Gulf of Mexico. It takes 3 years. If you plug the well, it's gone, right? Shale didn't do that. You start it and close it in 3 weeks' time. Just get it back up and going. These guys are not going to drill themselves into oblivion. The price is going to be stable. Return on invested capital is higher and more stable. And building out the infrastructure to be able to sell LNG to the rest of the world, to get the pipeline so we get the natural gas to data centers, building out nuclear, the mini nuclear facilities and all. That sector to me is cheap with higher stable ROIC, and demand is going to go up. So that to me looks really good. I'm also all in on the industrial manufacturing renaissance. I've been all over that for a decade or more. So industrials are a little richer, but I do think we're going to have an absolute capital spending boom. So those two stand out. I mean, for me, you always have to be at least market weight tech, because it's what this country's great at. Being more than market weight tech, given how big the weights are in the S&P, is borders on recklessness. But I've hung with it. But I really think energy, industrials are the two that just kind of jump out at me as offering great opportunity. And if we really do de-emphasize this ESG stuff, which I think 3 years ago in a year-end note I write this thematic note every year, and I said, I think ESG is totally top tick. There's just a lot of endowments and all out there that can't buy energy, which is nonsensical because it's going to be so crucial. So I'm all in on Chris Wright's, zero energy poverty by 2050.
Chris Wright is to environmentalists what like a hunter is to preservationists, right? He actually is an environmentalist by doing like careful and planned fracking. He's brilliant, actually. He's brilliant. CEO of Liberty Energy. And it's interesting that the stock isn't up too much today because they realize that while their business model might get more profitable, they're losing Chris if he takes this. So it's one of those things. He's fantastic. I've seen him speak. in person. And I remember thinking, I've got a man crush on this guy, and I don't really want to tell anybody. I just told about 100,000 people. But when you talk about sort of energy, and I look at an equity sector backtest, and I'm in the reflation camp. I think we're in a reflationary environment, which is why I'm so bullish stocks. And you look at an equity sector backtest, and you're talking about energy, tech, and industrials being some of the things that perform the best during a reflationary regime, right? And reflationary, contrary to what people hope for, is not Goldilocks, right? Within reflationary is inflation. Do you think that President-elect Trump, and I guess we can't really, until we know who the Treasury Secretary is and the way Jerome Powell is going to work with the Treasury Secretary, do you think he has it in his quiver to be able to tame inflation through a productivity miracle? Or is he just going to be screaming to get rates lower, and he's not going to be able to deal with it if we get a resumption of inflation?
Yeah, that's a that's a tough one actually, because he's not a very patient man, right? So my personal view,
Nicely put, Barry. That was
right?
very kindly put.
Congregational Protestant from Connecticut, we learned
Fair
to talk
enough.
this way a long time ago, but I did live in New York for 36 years. I think for me, we targeting 2%, first of all, is inane, right? Right now, the annual standard deviation of CPI is running about 33 basis points. The average since 1947, when we started CPI in its current form, is 58 basis points. That's stable prices. The median inflation rate is 3. We're below that now on headline CPI. We've got stable prices. Just don't press too hard. I mean, if you think about all the pressing they did from below in the tens, it actually created capital misallocation, impaired the most important price in the system, and it was all because of an exogenous factor, which was disinflation through goods prices from China and the emerging world. House price inflation averaged 3, super core non-housing services averaged 2.5, 2.75, and goods prices were 0. So that's a pretty stable environment. Who cares if it's 1.5 or 1.75? It's just goofy. Well, right now it's 2.5. And I agree with you, Bobby. I don't think we're going back to that environment where we have 0 goods inflation. By the time we get done with restructuring global supply chains and with the damage the Fed did to the supply side of the housing market. That was the other piece about what I was talking about earlier, was they cut off credit to these small banks. That's where all the real estate development money comes from, right?
Yeah.
And so you're just not building. You look at multifamily apartment construction has fallen to 315,000 or something from 1 million. So yeah, rents might come down now, but then they're going back up. So we should just be trying to get stable prices and just find a way to do the Michael Jackson moon dance away from that stupid 2% target and back from
My
it.
buddy Tim McLean down here in Naples is going to have something to say about your comment with the cutting off funding. He's been in commercial real estate banking forever. So it sounds to me like you're a believer in the antidote for high prices is high prices, right? In other words, you're telling the Fed to try not to do too much. Is that right?
100%. I think if the Fed presses too hard from this point, I don't know that Austin Goolsby's right, and we're going to 2.75, which he seems convinced of. I think with the top end of the band right now at 4, they could afford to be patient, but they need to get at least to there, to loosen up that credit channel, take the pressure off small banks, and then we can see what happens, right? And we'll see if credit starts to flow to small businesses. If it doesn't, they may need to go further. But they're not thinking about it properly, in my view. Just watching these inflation metrics and not thinking about the volatility of them, the relative stability of prices. I heard Goolsby, not to pick on him, but talking the other day about import prices being up a little bit. Austin, have you seen what the dollar's doing, by the way?
Yeah. We'll be fine then.
In a month, that all goes away. So, and not to mention the fact that Chinese manufacturing PPI is negative 2.9% annualized, right?
You guys want to see my impression of Jerome Powell when Trump won?
That's it.
You ready?
Yeah.
Sure.
Ah, fuck. That's my impression.
Good. I think it was dead on. By the way, back in the day, I used to do stuff with Austin Goolsbee prior to him ever getting a job in the Obama administration. And he was a sharp guy. And I think the whole politics of everything has just confused the shit out of that poor man. And now, like, I think he doesn't know if he's supposed to give his honest opinion or the opinion that the Democrats pay him to give. And I actually feel bad for him. And I always liked him. I thought he was a good guy. But I do have a question. You go. Yeah. What are we going to say, Barry?
No, I was just going to say, I think he's very smart, but I agree. You know, when he was on Squawk all the time defending, you know, the Obama administration and all, I was like, dude, you really want to do that? Like, is that, wouldn't you just want to be credible, you know?
Right. And I think he's confused himself more than anyone else. Okay. So we are recording this on Monday. By the time this is out, I will have given the speech in New Orleans at the New Orleans Investment Conference. So I can right now give the topic out because I want to know if Barry or Bobby can point holes in it. Mm-hmm. Basically, the gist of the speech is that taking some of Bobby's reflation, taking some of Donald Trump's, you know, as Stephen Moore put it, pop the cork off the bottle of champagne and increase a demand-driven economy. Now throw in the fact that copper had this Herculean run over the last few years, largely based on the notion that we're all going to EV cars. So a confluence of a couple events right now means Trump wins, get rid of some parts of the Inflation Reduction Act, not as big a push for net zero by whenever. We're reflating a little bit too. Two metals that have not participated one iota in the last 4 years are platinum, palladium, rhodium to a much lesser degree because that's not a real futures contract to trade because the combustion engine was supposedly dead. Pendulums tend to swing in both directions. I think those metals that have been previously left for dead, which, by the way, still are left for dead. I'm hoping they don't have a 20% move before I give the speech. But I think those places are going to be a place to be. Barry, can you poke holes in that?
We're still running auto sales, you know, 1.5 million or so below pre-pandemic trend. And I'm starting to scratch my head about that one. Do we just not need cars anymore? I don't get it. It would seem to me that there's going to be more demand. I don't know. You know, EVs don't work for me living up in the mountains, so I'm not so sure I'd even want to try and poke holes in your argument.
So you think if I gave you that spiel and it was well put out, you'd be like, makes some sense, right?
Yeah, I'd probably want to dig some more for sure.
Robert?
I like the palladium one. I do. Yeah. And palladium has been, so palladium has existed for quite a long time in a permanent deficit, right? And it's essentially, it had almost like a permanent tailwind, almost to the degree that equities did, because you have permanent longs from the mutual funds and the 401ks, right? But when you got to about December of 2022, it went into a downtrend that still hasn't abated. I think it's
68% off the highs.
Yeah. And I think it's very possible for that downtrend to reverse. I don't know. I think the climate change narrative is collapsing under its own weight. It's not even Trump to me. So I think when you see it, unless we get, there's the hitch of the Elon Trump relationship there.
That is a good curveball.
Benefit by that friendship. I'm not saying that. Of course, we all know he is, but I'm not saying that's why he did it, right? Yeah. I am, and actually you both can, I'm sort of moving away from what you said, Jim. I like the Palladium conversation a lot. But if we end up with, there's already been stories out there, and everyone that's Trump's nominated for everything, they're already finding the bad in it, right? This guy, you know, pushed a 12-year-old girl when he was 13.
They never said anything for the last 4 years, though, when cross-dressers were stealing suitcase and all the weird shit was going on. They were all fine with that shit. Yeah.
Right. There's talk of the Trump administration fast-tracking self-driving cars, which would obviously benefit Tesla. A lot of companies have almost given up on the technology. General Motors looks ready to put something out. There's a couple of independents that look ready to put something out. But Tesla's clearly in the lead on that. And that would be something that would move me away from ICEs, right?
Why? Do self-driving have to go with EVs? Is that a match that cannot be broken?
I don't know. Honestly,
do you, Barry? Do you know?
I think it makes more sense that they're together. Go ahead, Barry.
I was going to say, I just think it gets you that much closer to the point where everyone doesn't need a car, right? You're actually car
That's
sharing.
A great point. Self-driving definitely gets to that point. That's outstanding. Yeah.
Right. So, you know, that strikes me as one potential issue there. And the other thing I was thinking about as we were talking about this too is, what about Europe? I mean, you know, whole of Europe is just so such a mess right now and not growing. And, they unilaterally disarmed around energy. And can they really keep this up? I mean, I haven't read that 400-page Draghi report. I'll get to it at some point. But they've got to be thinking to themselves, this is nuts. I mean, I don't, we're
How's
really
the
just
result?
going to go all in on EVs and how? Where are we going to get the electricity for them? Like more Russian gas?
Wait, so I have a quick question then for both of you. If I add silver to one of the industrial metals that I like too, because then you cover the non-China electrification part of it and have some precious in too. So maybe I'll hit silver a little bit too. That seems to balance it all out, right?
Yeah.
Yeah.
Yeah,
All right, Bobby, you got a question?
that's a good metals portfolio. I still believe in gold. I know gold's under pressure and
Yeah.
out of favor right now, but again, the dollar to me can't continue with this level of strength forever. And again, if we have this quote unquote austerity and it works, and people are actually, they have confidence in U.S. bonds to the level that they used to, I think you'll see the foreign buyers come back in. And this will switch me off to a different question, Barry, that I wanted to ask you. Steph Pomboy from Macro Mavens, she threw out a while back on Charles Payne's show on Fox that her idea to help the Treasury was she wanted to get it to President Trump, and she wanted credit for it, that her idea was that U.S. Treasury should be tax-free to domestic borrowers or domestic buyers. What do you think of that on its face?
I recall her saying that, and I hadn't really thought through the total implications. I suppose one reason why she may think that makes sense, and it probably does, is because the era of the price insensitive sovereign wealth fund or currency motivated buyer is gone, or gone is an overstatement, but is surely diminished. I mean, I wrote about this a long time ago about how the first QE program was really Japan and China in the early mid 2000s. Japan was trying to compete with an emerging China. And so, the Japanese intervened to the tune of like $340 billion from the fall of 03 through the spring of 04, just piled all that money into the belly of the curve, and then we sort of, as time has gone on, global trade is not expanding the way it was. It's not growing. So they don't have the surplus they once did. Now you have price sensitive buyers, right? So where are you going to come up with this buyer base? And there's a number of people that have pointed out, when you think about our total debt, comparing it to GDP is you're comparing a stock versus a flow variable. So you really should be thinking about our total debt in terms of total household net worth. And on that basis, there's plenty of appetite to hold treasuries. In order to get them to a lower price, you probably need to make them more attractive. And Steph's idea is one way to get there, I suppose. Although I think all things being equal, I'd rather have households buying stocks, right, and investing in the private sector than the public sector. But
I sometimes think it would hurt the muni market quite a bit, make them less attractive. Plus, at the end of the day, it is somewhat enabling of our profligate spending government and our huge issuance of bonds to make it easy to sell. But even considering that being on the negative side, I still think I would vote for it, because anytime you can take tax money away from the federal government, sign me up. So yeah,
100%.
Yeah,
we're of the same mind on that. So.
That's what I thought too.
So what overall then, Barry, if somebody came to you and said, okay, I have no idea how to interpret the market going forward, what areas do you like and what areas do you want to stay away from? I don't mean sectors. I mean just in general.
At 4.5 on 10s, I'm okay with treasuries here, though I do think that there's a chance, depending on how this whole sequencing dynamic plays out, how they deal with policy, we could still have another retest of 5. So actually extended duration a little bit. I've been primarily in the front end. I extended a little bit to the belly of the curve. I'm still 70-30 though, stocks and bonds. So I'm a little underweight fixed income. I like mortgage-backed securities a lot. I think credit's excessively tight. So not a big fan of either IG or high yield. On the equity side, I've been maintaining a decent holding of cash, 20-ish within an equity portfolio, but that's primarily because of what I'm long, right? I have no exposure to, should have had some in utilities, to get that whole energy piece, but it's such a small sector. But I've got no staples exposure, very little healthcare exposure, basically nothing in any of the defensive low vol sectors. So, it's market weight tech and com services, overweight energy, industrials, and materials. So the vol of those sectors is higher. So for that reason, we've done reasonably well this year, even with a decent cash holding. And Bobby, I'm sensitive to what you said before, right? I mean, if this whole thing, doesn't get sequenced properly, that's my word, not yours, obviously, but if it doesn't get sequenced properly, you get a decent pullback. And I agree. I 100% would want to be in a position to buy that, because I do think I've described this cycle as likely to be somewhat like the 60s, right? Reflationary. First wrote about that in 21. I think this is likely to be a very strong CapEx cycle and strong productivity growth, through all that CapEx, through technology innovation adoption, really diffusing into a bunch of other sectors. We started to see it late last cycle in consumer services. Now it could broaden out into financial services. And so there's a lot of good stuff that could happen this cycle. And, lowering tax rates, creating tax incentives for capital investment, that is a great environment for equities for sure. So kind of where my head's at, but we've had a big run, right? So
okay,
here
we go. Okay, so for the viewers here, all of us are pushing 60. Bobby's a little further away for the most. So we are not young and hip and into all the latest and new technologies. But we do no longer, as my guest, roll our eyes when Bitcoin is mentioned. Bobby and I have been in Bitcoin for quite some time. I barely even understand what the hell it is, but I want to underscore this point. I don't give a shit what it is. As soon as BlackRock gets into it, Fidelity gets into it, when they start increasing their footprint, I mirror them. Now, the world's second biggest institution, the U.S. government, second only to BlackRock, which, by the way, is a joke, but it's not as much of a joke as I want it to be, has gotten into it as well. Do you have an opinion on Bitcoin, Barry? Where do you think it fits in?
I do. And it's funny, I was at a conference at the University of Colorado back in 2017, and they were all talking about Bitcoin and blockchain and all this. And so I raised my hand and I said, how many of you all have read Hayek's The Denationalization of Money? And no one really was familiar with the book. And I said, well, Hayek took a break from writing Law, Legislation, and Liberty because he thought it was an important topic. The private sector is better than the government at everything else, so why not money? And his idea was banks would create their own money. He hadn't envisioned something sitting separately, technology-based. But that thesis alone, the amount of developed world debt, the spiral we're on, I hope Doge gets it right. I hope we get spending back to 20% of GDP. But man, this just seems like a pretty good hedge to have in the likely probability we don't get it right.
That's my point exactly. I spoke at a Bitcoin conference in Austin. I said, I have no idea. You people all think you're 100% right, and you think that Bitcoin is the answer to all the problems. And they do think that. And I said, I am not with you on that. But I think if there's a 10 to 15% chance, and you guys are right, I certainly sure as hell don't want to be on the sidelines. I am going to be with you. And they seem to be fine with that message. Now we have Cynthia Lummis saying that she wants to have a strategic Bitcoin reserve. She's a national senator, right? Cynthia Lummis, isn't she?
I believe so.
She tweeted it. Yeah. Bobby, what do you think about it?
So I was actually having this conversation today. Bitcoin, to me, my previous stance was, I don't know if Bitcoin is Facebook or MySpace, right? I've decided that it's Facebook, right? I decided that quite a while ago, and I started to invest in it, and I've traded it more than I've invested in it, but I own some. I don't own an overwhelming amount. And I keep thinking to myself, Barry, to your point, I think the private sector does everything better than the public sector does.
Except for war.
Well, I don't know. We've never been given that.
Tried it, right?
Give it to a bunch of Italian guys, you might do really well.
We hadn't fought the Wagner group either, But.
Good point. The Wagner group does war pretty well, right?
Doesn't at some point the government have to kind of give in to Bitcoin and say, look, you can pay your taxes with it? I mean, isn't that the thing? I mean, gold, obviously gold, 5,000 years, whatever. I argued with a gold bug a while back saying that, like, look, the next generation doesn't care about jewelry. And if that becomes a worldwide phenomenon, you're seeing engagement rings that are rubies and that are lab grown diamonds. Jimmy, we talked about that a couple of weeks ago. The next generation doesn't care so much about jewelry. And other than the impervious nature of the metal itself, what does gold have intrinsic, other than it's had intrinsic value for 5,000 years? If we end up in a situation where the government finally says, look, you can pay your taxes in BTC, it's worth $1 million. I mean, like overnight. And that's enough for me to hold it. But I also think about it, and I think one day the government is going to say you can no longer convert Bitcoin to dollars. I don't know how they would enforce that. But then what happens? Right? Because at some point you have to convert Bitcoin to dollars. Still to this day, a lot of Bitcoin devotees will say you don't have to, but I don't agree with that. I don't understand it.
Yeah, well, my perspective on that is governments trying to clamp down on things like that. China's the best example, right? I mean,
Didn't work, right?
They tried zero COVID and it blew up in their face. They have a closed capital account. This is one of my concerns about the dollar right now is that, first of all, that US dollars become a petrocurrency. That was not true for 50 years, but we're now one of the biggest exporters in the world. And so China, South Korea, Japan, Germany, they're all short energy. So it used to be that you got a big increase in the price of energy, then those countries had an offset to it. Well, now it goes the same way, right? So it tightens the screws on them. We initiate tariffs on China. They say, all right, we'll do what we did back in 2018. We'll just let the RMB, CNH go down 10%. That'll offset it. They've got serious outflow pressures, right? And so we know they have a closed capital account, but money finds a way. I mean, these guys will go to casinos and cash out chips and, find a way to get the money out of the country. So I don't really believe even a super authoritarian place like that can truly control these things. And I think for our government, we had the closest thing to someone trying to control it, Gary Gensler, and he's done, right? And everyone wants him out. So I don't think this country's going to stop innovation.
So there could be a case where the government just finally says, look, I give, it's currency, it's money. You can see that happening 20 years from now, however long it takes.
I'll take a crack at that after Barry does, because I have an opinion.
Go ahead, Barry.
Sure. Well, no, please, by all means, go ahead.
I think that window was 6 years ago where they were going to stop it. You know what I mean? And now I think because there's a couple different things at play. One, it gets too entrenched at so many different levels, but it also gets entrenched with the government people themselves. We have enough people in government who are like RFK. I know he doesn't have an official elected position, but he's said previous times that he's put a tremendous amount of his wealth in Bitcoin, I believe he said. But other these people, once they have it and it's everywhere, then there's no more incentive to vote it out, because who's going to vote it out? So I was surprised they let it get to where they did, because it really encroaches on their game, which is the control of, transactions. And it really does. So I still think there's a very, very tiny chance that this is all a big scam. And perhaps this is not. No, I'm sorry. Laugh all you want.
Say the word.
It is more than a 2% chance that this could be some sort of a government surveilling thing, and they're on to everything.
Say the letters.
How nuts does that sound? And I'm saying 2 to 5%. I'm not saying I believe
the letters.
That's the case.
CIA.
Google is the CIA, just to be clear. We've talked about this on the show a few times before, which, by the way, it is the easiest argument on the planet to win. If we all ran the CIA and we found another group that was collecting data better and more efficiently than we were, we'd infiltrate it in a heartbeat, wouldn't we? I mean, it'd be silly not to. We'd be terrible intelligence officers if we did not. Anyway, am I crazy to think that there is a tiny chance that we're all being scammed on the whole Bitcoin thing, Barry?
Listen, one of my good friends runs the main digital fund for one of the biggest macro hedge funds. And every time I talk to him and guys that work for him, I am amazed how much they know about the transactions on Bitcoin. Like, okay, the FBI is selling now and this person's selling. And it's like, we used to just get ourselves all twisted up about who's doing a big options trade at the SIBO, right? And we could kind of figure it out. Funny story, like we were trying to figure out who was buying all those Nikkei futures from us in Singapore. we were setting up the cash and carry index arb in big size. And anyway, finally found out it was Nick Leeson. But yeah, like
that's a funny story.
It is a crazy story, you know. And I actually took $1 billion of that cash and carry and sold it to the old Wells Fargo Nico as a cash and carry money market position. And then we had to claim it back when Kobe earthquake hit, and we were like trying to unwind as quick as we could. But
yeah,
anyway,
I was at Nico. I wasn't in that unit, but I was at Nico, so I heard a lot about that.
Right. But anyway, the point being though, Jimmy, to yours, which is, yeah, I mean, it's pretty easily traceable. So, you know, they'd be crazy if they weren't really watching what's going on. You know?
Like we said, same with the Google thing. The only thing that keeps the government from being able to total control was the inability to surveil. Now that ability has come around, and now they can transactions. But even 10 years ago, if you'd have mentioned to someone that your credit card transactions are being monitored by the government, people would have thought you were crazy. And now it's like, well, you know, of course they are. I mean, why wouldn't they be? There's been kind of an awakening, and nobody has anonymity any longer.
Right.
Bobby, you got any final questions or no? Barry, you got any final thoughts?
I do. So we're pretty positive that President-elect Trump listens to this show. At least I'm pretty positive in my mind that he listens to this show. And I think Jim would agree with me.
Of course. You'd
But
be silly not to. Smart and irreverent.
So Jerome Powell finally goes, I had enough of this guy. I quit. I'm quitting. And Trump says, you know, I heard Barry Knapp on their show. He's a smart guy, a lot of smart guys, but he's a really smart guy. You accepting that position as chair of the Fed? And if so, would you just go, all right, I'll accept the position. Here's the math. That's when we change rates. I'm going to the golf course.
Yeah, that's not a bad idea. Actually, what I've been lobbying for, and I discussed this with Kelly Evans a couple of weeks ago, is they desperately need a vice chair for capital markets. You know, it's really nice you hired a community banker. It's nice that you have a vice chair for supervision. You need someone that has been, 40 years ass deep in capital markets and knows, hey, the dollar's starting to go up here. And, you could cause another big accident like you did in SEP 22. I was in Boston the days before that. And I told them, if they hike another 75 and they raise their terminal rate forecast by at least that much, the yen's going to crash and the Japanese are going to intervene. I woke up the next morning. It's not being prophetic. It's just watching this stuff for that long. They need people on the board with real capital markets experience that can tell them how their policy is translating into the system. The stuff that we talked about with the curve, that's just second nature to people like us,
Right. It's so funny that you mentioned.
And they need it.
Because when I was talking about the pace that they implement these policies, that's what I was, in my mind, what I was getting at too. They need market people on board to spot out potential disruptions because they're not privy to it. And everyone who sees market moves, like we know things like how market position can move markets, where they just think, well, the fundamental story is this. That shouldn't be. Like they don't know everyone and their mother was short the yen. Things like, which is just, it's crazy to me. So I agree with you 100%. Barry, one last time, tell the people where to find you. And by the way, people, find Barry. Subscribe to his Substack. The guy's brilliant. What is it? Where is it?
It's ironsidesmacro.substack.com. And essentially what you'll be reading is, what I used to write at Lehman and Barclays, Guggenheim, that was only available to institutional clients. I've put it out there at a price that is attainable for, retail, sophisticated retail investors, wealth managers. It's a really interesting product. 3,000 words every week with tables complete with sector and asset allocation. And, it'll take you through policy, the economics, and the market's outlook and tell you where I think you should be.
That product will increase your IQ by an average of 10 points is my guess. Bob, any closing words before I play us out?
Well, mine's so low. That's welcome.
That's what you need it more than anybody.
I need it. Yeah.
Do you have anything to make Bobby better looking too, or no? Whatever. We'll talk about that later. Anyway, first of all, thank you guys, people, for joining us. Thanks for the retweets, the DMs. None of this works without you. We just started our subscriptions on YouTube, and already we broke through 1,000 in just a couple weeks' time. You guys are the best in the support you've given us. Please support our sponsor, Hardcore Italians. Use our promo code and our specific code, which is FU. Yes, it is. And we set it out that way on purpose. But thanks again. Remember, Bobby, what Bobby and I went through of 20 years of working at legacy media. We did not like the fact that we're getting leaned on all the time by overzealous producers and sponsors of what we could and couldn't say. We might not be right about everything, and some of our opinions are bullshit, but they are our honest opinions without any other bias. And we do get great guests. Thank you for joining us on The Future's Edge.